Hi, I'm Edna Ogenerike Ojugo. I am a top finance person on LinkedIn and Twitter, and I'm here to take you through the steps on buying your first stock. First off, congratulations on getting into the stock market. Not a lot of people make it this far. You have indeed done something worthy of note. But first, let's get into the story behind it. Now, when you hear stock market, you think of things like stocks going up, down, green, red, profit, loss, all of that stuff. There are a lot of things behind the stock market. But what are you really doing when you buy a stock? Simple. You are buying a piece of a business. That's what buying a stock is. When you buy Apple stock, you are buying a piece of Apple. When you buy a share of Amazon, you are buying a piece of Amazon. Now notice how I use stock and share interchangeably. Now there is a slight difference between them, but for the sake of this video, you can use them interchangeably because they sort of mean the same thing at the end of the day. So now that you know what you are doing when you buy a stock, what do you need to do before you buy a stock? Really, what you need to do is what you do before you buy anything. You think to yourself, what do I need this thing to do for me? Do I need it to grow my money, to multiply my money? Or do I need it to preserve my money for a long time? How long do I need to invest? 5 years, 10 years? How long do I want to invest? 5 to 10 years? Or do you want to invest for 5 to 10 days or 3 months, 1 month, 2 days? Ask yourself all of this. Can this stock do what I want it to do? Same thing you do when you buy anything. That's the first thing that you have to do. When buying a stock, the simple thing you want to know is that you want to buy low and sell high. It's like trading, right? It's like trading anything. Let's say you will buy clothes. You're a trader, you buy clothes and you sell. What do you really want to do? You want to go to the market and buy at the lowest price possible and sell at the highest price possible. That's simply what stock market investing is. You buy at a low price and sell at a higher price. And it's as simple as that. So you ask yourself, which company can help me best do what I want to do? Remember, you are trying to buy low and sell high, but then there's a time element in there, right? What time do you plan to sell? Are you someone that you want to invest for 5 to 10 years, or do you want to invest for 5 to 10 months or 5 to 10 days? You have to ask yourself, how long do you plan to invest? And then how long you plan to invest will determine which company you should be investing in. So if you want to invest in the long term, you have to look at companies with good long-term prospects. Those companies will be cheaper to buy today than they would be in a few years. For example, it's like buying Apple or Amazon 10 years ago. I mean, today you would have made multiples of whatever you put in, right? So that's simply what it is. You want to buy low and sell at a higher price, and then think of the time that you want to invest in. So as a side note to that, you also have to set realistic goals for the stock market. Because if you plan to invest for say 5 to 10 days or 5 to 10 months, the thing is the stock market is a very volatile place. That means things change quite quickly. And that means that you cannot really predict with 100% certainty what will happen in a short time. You can't tell what will happen to Apple stock in 5 months, in 10 months. Like the stock could be higher or it could be lower. You can't tell what will happen to Tesla in a few months, right? You don't know. So what you want to do is to invest for as long as possible. Plan to invest for as long as possible so you can get reliable and good returns out of your investing. Really, I can give you all the tricks, all the fundamentals behind investing in stock. But all you need to know to start is really, what do you want to achieve? How much returns are you looking to achieve? And which company can help you get that? There are so many companies in the stock market. Are you even looking to invest in the Nigerian stock market, in the US stock market? So many companies, right? What you need to do to pick your first stock is don't overthink it. Your first stock is not going to be the only stock you will invest in, right? You can invest in as many stocks as you like. Your first stock is just the company you are starting with. So start with a company that you already know, with a company you understand. Let's say you enjoy shopping online. You shop on Amazon for days, right? Or you shop on Jumia, you buy a lot of things on Jumia. Start there. Invest in a company that you know, that you think you would continue to use for a while. So start there. And then you keep understanding, reading online, reading what analysts are saying, and training yourself, watching a lot of videos, and keep learning. The thing with stock market investing is that it's not an event. You just have to keep at it, keep learning, keep growing, keep reading things online, watching YouTube videos, learning about the stock market as a whole, and keep investing. So you do things like dollar cost averaging, which is simply just buying when a stock price has dropped to get advantage of a lower cost. Example, let's say you buy Apple stock today at $10 and then tomorrow it drops to $7. What can you do? You bought one stock at $10, so that means you spend $10 on that stock. But then the next day, that one stock is now worth $7. What can you do? You buy one extra stock, and then the total cost you now have is $17 for 2 stocks. So that means the average cost for that stock is now 17 divided by 2, which is 8.5. So now you spent 8.5. Notice how the price dropped from $10 to $8.5. That's simply what dollar cost averaging is. Spending less money, right, at buying things when things have dropped to have a lower cost on average. So you can do things like that, dollar cost averaging and all of that when you see the price drops. But really, all you're trying to do in the stock market is buy at a low price and sell at a high price. The best way to do this is try to invest for as long as possible and invest in companies which are reputable and which you think will be around for the long run. And remember, it's your first stock. You don't have to overthink it. Start from where you are. Start with companies that are familiar with you, and you can never go wrong. Thank you.